Welcome everyone to episode 1 of Following the Money, a technical trader's outlook. I'm going to be going over some current setups in the financial markets. First, I've got a disclaimer. The views, opinions, and analysis expressed in this video are solely for informational and educational purposes. They do not constitute financial advice or recommendations to buy, sell, or hold any securities mentioned. Viewers are encouraged to perform their own due diligence and consider their risk tolerance before making any investment decisions. So I first want to talk about indexes. So I've got the S&P 500 on the screen now. Pretty much all of the indexes in the US are trading at all-time highs, except for the Dow Jones Transportational Index and the Russell 2000. Now, throughout this whole move to the upside here, there's barely been any pullbacks, and majority of the time people have been calling for some sort of pullback. And as we know, markets love to climb, walls of worry, so don't be surprised if this goes far higher. This move to the upside has largely been led by the pullback in bond yields. The fact that it has pulled back to its 21-day moving average and it has immediately been met with buyers pushing it right back up to all-time highs effectively shows there still is quite a lot of strength in this market and could potentially go a lot higher. The other thing I want to point out as well is if you look at, say, a big shipping container, for example, the boats that actually carry them, it takes a long time for these boats to turn around, right? But once they have turned around and they're on their way, again, takes a long time for them to turn around again. And why I point that out is you've got a market since effectively December, November 2021 has been in a downtrend, largely led by the increase in interest rates. And it has managed to form a bit of a base here. You've actually got the left shoulder, head, and right shoulder here. And it's managed to break through that, head out to highs, pull back to that, and be met with strength right at that previous support and right up to all-time highs. So there is actually support there. There is actually fundamentals backing this up. And again, this has largely been led by the pullback in bond yields that we've seen as well. And we're seeing central banks, particularly the Federal Reserve, talking about pausing hiking rates and potentially even cutting them this year or potentially next year as well. I've got bond yields on the screen now. So look at this. This is a significant pullback. So of course, you're going to see a lot of money get pulled out of the safer assets, whether it be term deposits or government bonds, and now going into riskier assets. And that's why you're seeing NASDAQs and S&P 500s all trading at all-time highs. And we're even seeing in other riskier assets as well, for example, crypto. Now, Bitcoin isn't exactly at all-time highs yet, but it's getting pretty close. And we could potentially be at that all-time high level, maybe potentially this year. I'm not really an expert on crypto. I don't particularly trade it. But if I were to, this would be the kind of setup that I would typically look for, particularly if it was a stock, for example. So you've got a downtrend, you've got a base forming here, and it's managed to break out of that. So I'll put that resistance here. Left shoulder, head, right shoulder, breaks right through that and doesn't really pull back at all. I mean, the furthest it's pulled back to has been its 21-day, besides maybe this shakeout here, which was met with buying right back to push it into yearly highs or even highs for the past 2 years. And look at this. So I'll put the resistance on here as well. You've got that nice consolidation here right on the 21-day and breaking out. Typically, when you see this, it does signal that it may potentially move higher. If you are a momentum trader like myself, for example, and you do look at crypto, this is something that you add to your watch list and you wait for the next consolidation like this that you can actually trade. So this will be going on my watch list. Again, I don't really do much with crypto, but it is something to watch. What I like to use crypto for is really to see retail and even sophisticated appetite for risk, because you know if there's money flowing into assets like Bitcoin and other cryptocurrencies, the appetite for risk is out there. So the fact that this is moving up like it has been, this is an over 8% move in a day. There's clearly an appetite for riskier assets. Now, I know there's news coming out about Bitcoin ETFs being launched this year or even pretty soon. And this has probably largely got a lot to do with that. Having said that, the fact that it's able to move like this shows that there probably is an appetite for risky assets. So looking at growth stocks, which is a field I like to play in, this is a good sign for that. And that's why I do actively watch these assets. Now, gold late last year actually managed to break out into all-time highs. The thing with gold, it's a very sentimental asset. And what that means is that whenever it does break out into all-time highs, you're going to hear a lot about it in the media, whether it be on Twitter or just traditional media. And all those gold bugs are going to rave on about it. Now, that doesn't mean that necessarily wrong, but whenever you see a lot of positive sentiment about an asset and it's trading around all-time highs, it does potentially reverse and particularly fade. And we've seen that over and over and over again. So here when it broke all-time highs, faded. Here when it broke out at all-time highs, faded. And it's done it again here as well. So typically what I've done in the past, for example, when there's a very sentimental asset that I'd like to trade, if I have a positive long-term view on it, which I imagine a fair people do with gold, I tend to look for it to pull back to its moving averages. If I would look at gold, I'd say maybe something like the 100-day or the 200-day, and around those areas I would look to accumulate. Again, I don't particularly trade gold, but I use this obviously as I guess, am I going to be looking at gold stocks or other commodity stocks? That's why I would necessarily look at it. But I know a lot of people do, so I thought I would throw this in there as well. Now, while we're on the subject of gold, I did want to talk about junior gold miners. As we can see, this is an ETF. It's not doing very well, especially if you compare it to the gold chart that we had on before. Now, reasons for this, it may come down to one of two things, or both potentially. One, either because these companies require a lot of funding to really get things going, and if you look at where interest rates are right now, they're probably not getting it, so they're probably not actually be able to get things going. The other thing as well is that although there's an appetite for gold, a lot of that due to inflation or people losing faith in the US dollar, whatever that may be. But as we start to see the appetite for risk start to take off, which we are seeing when we look at assets like Bitcoin taking off, or you look at the price of a lot of agriculture stocks as well, they're starting to get sold off. So there clearly is an appetite for risk at the moment. So you might actually see that switch over to some of the junior gold miners as gold starts to take off as well. Again, this is purely just a theory. I don't know. But this might be something to watch as well going forward. I wanted to show crude oil shortly as well. Personally, I stay away from crude oil because it's such a highly manipulated asset. But why I'm showing it is that it's an amazing example of the Wyckoff accumulation and then distribution logic, which I've put on the chart as well. We can see earlier that you've got this great bullish move to the upside, signs of accumulation shown in here as well. And then we get this big distribution base as well around the top, heading straight to the downside as well. And since then, who knows? I mean, it's tried to turn around, but it's come off since. You would think, given all the conflict going on in the Middle East right now, that it may look to turn around. But as usual, I'm going to look for price action to confirm that as well. You look at a lot of the oil and gas stocks, they're still actually doing quite well. So maybe that could be an early signal of the turnaround in crude oil, but it is one to watch regardless. Next up, I've got DBA, which is an agricultural fund. Now, why I'm showing it, I don't think it's tradable in any means. And however, last we saw it when it was doing very well, when it really started to take off, if you look around here, was November 2021. And that, if you recall, was the top of the last all-time high we saw in US share markets. And since then, it has started to come off. But look at this recently. It's really starting to gap and head down lower the same time as we're seeing US share markets heading back to all-time highs. Typically, asset class like this, agriculture, we're talking about food here, these tend to be asset classes that rally when either inflation's high or when there's a lot of uncertainty. People want to stick to companies or funds that produce goods and services that people need rather than things that people want. They're not necessarily seen as riskier assets. So the fact that this is broken down shows that there must be clearly not be a lot of demand for this stock. And then we're seeing riskier assets take off as well. So this further confirms that bullish bias that we're seeing in the market right now. And again, this is something to add to your watch list to see as an appetite of risk, similar to Bitcoin that I mentioned before. Hack, or a cybersecurity ETF, leading the market right now, at least one of the leaders. With this, when you look talking about leaders, what I've tended to do in the past is I look for who's leading within that sector. So I'll go and actually see which cybersecurity stocks are performing the best in terms of the fundamentals, in terms of revenue growth and what have you, but also looking at the price action as well, see who's actually leading, and then looking to trade those ones. Similar to semiconductors. So if you have a look at this semiconductor ETF, it's trading at all-time highs. So it probably is the actual market leader out of all of the industries within the S&P 500. It's clearly performing the best. And we all know who the leaders are in there, so we can take a look at them in a moment as well. Similar to the steel ETF as well, it's been doing quite well as well. And if you would actually do a scan on the markets right now, in terms of, let's look at all the stocks in the US or Australia where I am, that are above their 50-day moving average, you would see a lot of steel miners and explorers, iron ore, in that list. And it is outperforming the market right now. Now, NVIDIA, in hindsight, was a great trade. It braked out last night, and that would have been very good to get in on that breakout. I mean, this is pretty much exactly what you look for in terms of a consolidation and a breakout. However, one thing that was of concern to me, you can see this clear support level here as well. Now, why I bring this to your attention is that you can clearly see there's going to be a lot of liquidity and demand at this level, and markets love to target those liquidity areas. But look around here. You've got the high here, price breaks through it, immediately comes back down. You've got the high here, price breaks through it, immediately comes back down. I can assure you that around these levels, people were most likely looking to get short, and you probably got stop losses around these levels as well. So every time it's coming in here and shaking people out and then heading back down to another liquidity area, what that screams to me is that you've got a lot of manipulation potentially going on, and that you do tend to see that around distribution areas. Couple that with the fact that you're trading at all-time highs. So it did look like that, to be perfectly honest with you, but as we're seeing, it's broken out and it's closed right on the highs, showing clearly a lot of demand, a lot of buyers coming in. So I'm not sure what's next, but the price action does suggest that it does look to head higher. And then you couple that with the actual semiconductor index or ETF, the whole sector is doing very well. So a rising tide is going to lift all boats. So it probably is likely that this thing's going to continue to head higher. We've got SMCI or Super Microcomputers. So it's been forming a very nice base here. Now, the reason why I like this actually is it's got something known as a chi base. Now, I didn't come up with this term. I actually read it somewhere. I think it was probably from Mark Minervini, to be perfectly honest. Now, you look at the volume that was traded at around these levels. It's probably a lot of trapped buyers around this point, given they probably bought around here and it immediately gapped and went lower. So there's probably a lot of orders stuck in at this level. So people who are looking to accumulate, what they may do, and again, it's not like I'm on the inside, so I can't guarantee this, but what they can do is they can form these sort of bases here, and it sucks in a lot of the liquidity because a lot of the impatient people with orders here, they'll see it trading around here for such a long time. This is quite a long time. This is over 6 months. It's actually just sitting around this level. So you imagine you've got an order here, but the rest of the market taking off, you just want to get out. Well, they may get sucked in, they may sell it in at lower prices around here, and then once all that liquidity has been sucked in, then it can start to look to take off. So that might be what we see. But also we combine that with the rest of the sector that's doing very well. This might be one that I might look to trade. I'm not sure what are my thoughts on this one yet. I'd like to see a very tight, small pivot formed with a very favorable risk-reward ratio. Then I might look to trade it, but it's something that's definitely on my watch list. I've got Biome up now. So this formed an IPO base. This is typically what I look for if I am going to trade an IPO. I don't think I've ever actually bought in and participated when it comes to the capital raising side of IPOs, because it does typically do something like this where it pulls back and it just sits in this base for a long time. But if it does manage to, I guess, see a lot of accumulation within the volume and actually break out, and look at this as a very nice pivot here, that's typically when I'll look to actually trade it. And you can see it's really taken off here as well. So this here, I would consider this a tradable base. I'll just put some trend lines on it here as well. This was all a tradable base in my opinion. Consolidation on low volume to the moving averages and then breakout on high volume. It's taken off a fair bit since then, so it's more than doubled in effectively a month, or less than a month really. And this right here, fading of a move, a lot of volume, typical sign of a top, so it's likely it's probably going to pull back. One to add to the watch list for sure. Now, if I look at the financials here, I think it's actually doing quite well in terms of revenue. So look at that. Consistently growing its revenue. Probably, I doubt it's profitable. No, so it's definitely not profitable. Again, I'm probably not going to sit here and do a massive, fundamental analysis of the company. Again, I'm more of a momentum trader just on growth stocks, which this would technically fall into that. But I'm probably going to wait for another tradable base to form. So I've just got it on my watch list here. Next up, I've got a gold stock, so RMS from Illustrious Resources on the ASX, forming a bit of a base here. It does seem to be getting tighter around these moving averages. I would like to see it get a lot tighter before I would look to trade it, but it is on the watch list, and we've seen how gold is performing. So as we see more people form into these asset classes, this one is clearly performing well, especially if you combine it to the junior gold miners ETF that I've shown before. Now, this is by no means a junior gold miner, but it has managed to hold up quite well. If I compare it to one of the old darlings when it came to gold stocks was EVN. I remember that one being talked about a lot, particularly when I was an advisor, and it's performing pretty shit, as you can see. It's nowhere near its highs. And that's due to many things, which I'm not going to go into. But RMS seems to be doing a lot better. CrowdStrike, CRWD. Now, this one I missed out on. I was watching it for a very long time. You've got a stage 1 inverse head and shoulders base being formed here. I'll add the awesome oscillator on the chart now. And the reason why I do that is it actually shows, I've got 2 of them on now, 1 second. it shows the inverse head and shoulders a lot easier for me. So you can see that left shoulder here. And then you can see the actual head being formed here. You see the divergence on the awesome oscillator. And then you've got the right shoulder and a breakout here. This here I would have loved to trade and get involved in. US stocks tend to be more difficult to trade for me due to the time difference. I have to stay up quite late to do this, and I've usually got a lot more other things to do in the morning. But this would have been great. It's gone. Let's have a look at this. How much has it gone up since ideally when I would have got in, which was around here? 50% in a few months. So that would have been lovely. Missed out on that one, but again, it's pulled back and it didn't even get to its 50-day. It's bounced right off its 21-day. So a lot of strength in this stock. If we get any sort of a consolidation again, like in the past, like for example here, any consolidation like that, I will be watching it and most likely trading it. BHP, not a stock that a lot of people trade. I don't think I've ever traded, but it does fall into steel and iron ore stocks, which I talked about before. Basically trading at all-time highs, a touch below, pulled back to its 21-day moving average, and is getting a bit of demand there as well. And the reason why I watch this is if this is able to continue going up higher, all of those smaller iron ore stocks, which I'll get into, are probably going to follow along, and there's going to be much better risk reward and growth opportunities within those stocks as well. So that's why I tended to watch this one for iron ore. And one that I am watching in terms of an iron ore stock is MGX, or Mount Gibson Iron. So it's formed this stage 1 base here. Again, I'll put that awesome oscillator on so you can see the divergence as well. So you've got the left shoulder here. Price makes a new low. The oscillator does not. It makes a higher low, forms this time base, breaks out of it, pulls back to the moving averages on low volume, as I can see here, and it's forming a base. So, and the other thing as well, which I will zoom in on, I'll go to the 4-hourly. So I can assure you there would have been breakout traders that got involved in on this. I nearly did myself, and the stops probably would have been around here. And look at exactly what it started. Pull back right to that level, a lot of volume, and it immediately bounced off. So why that's important is that if it does manage to break out again of this range, all those people who got stopped out of here are likely going to pile back in again. So you're going to see a lot of potentially demand coming in for that. So granted, you continue to see BHP heading to the upside and other steel stocks, this will likely get carried along with it. Plus, you're going to have all those people who were just shaken out jumping in on it as well. So this is one of those momentum stocks that I do like to watch and potentially might even trade. I've got car sales on the screen. Now, as far as I know, I don't think there's really any other competitors in terms of the product they do. And it is one of those disruptors in the market when you think about it. You don't really have to go to one of those car yards to buy and sell cars. You can do it all online. And the revenue numbers back that up. I mean, look at this. So it's massively growing its revenue substantially. And it's profitable by a fair bit as well. So these are the kind of growth stocks that you do want to trade, that at least I like to trade. And it did form a base. The reason why I didn't get involved in that is there's not really much of a tight pivot point that I can get involved in. It's probably one of those stocks that you're probably going to have to buy in at a demand level, meaning around here. So any kind of retest of a demand level, which should probably likely be around here now, these moving averages, is probably where I might look to take a position. But again, I'm not really overly fond of it, so we'll see. Again, it's just going to be on my watch list. Hub24, trading at all-time highs. If I have a look at the revenue here, I believe it's doing very well. So growing its revenue has slowed down, but again, it's still growing its revenue, and it's turning a profit as well. So good signs for the company itself. Now, if I look at the charts, so first formed a massive stage 1 base that it was able to break out to, actually gapped out of that base on earnings, which is a very positive sign. Pulled back to that, immediately met with demand, and has formed a base here, which was tradable. Was watching this one very closely myself, and was managed to break out, and it's continued to head upwards as well. Granted, the market keeps doing what it's doing. This is likely going to keep going up with it as well. So any sort of pullbacks or contractions are going to be traded. 88, traded this one myself, still holding it, doing very well. Company's growing its revenues a lot, closed at all-time highs today. Very good signs. So any sort of pullbacks to demand areas is where I'm going to be looking to accumulate this one as well. DUR, so formed a cheap base, which is what I discussed earlier before, and has broke out, and it hasn't even managed to pull back to its 21-day moving average. Likely to continue that way, so don't have any immediate plans to do anything with this stock, but any sort of pullbacks to demand areas or consolidations, I'm going to be watching very closely. If I have a look at the financials, I think it's doing very well. Yep, growing its revenue a fair bit and even profitable as well. So 11 million in net income, and it's only got a market cap of 420 million. So definitely something I'm going to be watching. I'm not really very knowledgeable when it comes to this sector. I'm not even sure what the company does, to be honest with you. So something to do with steel and concrete. So, probably a useful company, clearly. I don't know enough about it. I'm purely just going to be looking at the charts. TUA, so I really missed out on this one. Formed a very nice base and broke out with that and has head straight up since. Hasn't even been able to pull back to its 21-day moving average, which it likely will soon at some point. But if I look at the company, it's growing its revenues substantially as well. That's why I've still got it on my watch list. Any sort of pullbacks and consolidations, I will be looking to trade this stock. Cloudflare or Net has been performing pretty shit lately. This used to be a darling of the market. You can see here earlier, you've got that Universe Head and Shoulders. I'm going to show you a lot of people would have got involved in that. And it did go up initially, but people don't tend to sell. And it's been basing for a long time. And look at all these wild price swings as well. I can assure you there's a lot of trapped buyers stuck in this stock. And given the fact that you've got the NASDAQ and you've got all these other technology stocks trading at all-time highs and it's still stuck all the way down here, not a good sign. I guess if you're, one of these guys that's going to do a ton of fundamental analysis and figure out if it's undervalued, then this is probably an ideal candidate to at least start looking. But in terms of the price action traders out there like myself, I don't want to touch this. So I'm going to watch it because it could potentially be a winner given what I mentioned before. But I'm really not going to be touching it right now. If I look at the financials, I think it's actually, it's growing its revenue, so there clearly must be something there. But there's obviously a reason why it's not doing well on the chart, and that's why I'm probably going to stay away from it going forward. MAD or Matter Group, now, not going to lie, I got stung on this one, got in way too early, but again, saw a cheap base, which I've gone through a couple of times already. Company's growing its revenues, it's doing quite well, bringing up on the screen now, so it's been doing very well. And look at its income, so it's doing 20 million in net income every year. Does have quite a significant market cap of 1.3 billion, but it did perform well in terms of on the chart, so it's got that nice cheap base here. I guess this wasn't really a substantial breakout, but it was enough for me to get involved. And it's come down here. It wasn't a big stop, so it's not a big issue, but it's still, again, this touches on what I discussed before. Should this actually come back up, form a nice pivot point and break out again, all those people who got shaken out, like myself, are all going to look to rush to get back in. So I'm going to be watching this. I guess for the smart money, this was probably a very good accumulation point for them as well around this level. That's probably what I should have done. Would have had a much tighter stop as well. But this is why you take down notes, and so you can learn from all this, which is something I can get into in another video as well. CIA or Champion Iron, clearly the leader when it comes to iron ore stocks on the ASX at the moment, managed to break out of this massive distribution zone that's been going on for over a year, nearly 2 years, and formed a very tradable base here as well. And this is something that I was involved in, which has been quite lucrative, as you can tell. So again, price comes up on a lot of volume, pulls back to its moving averages, the volume drops off substantially, and then continues to break out and actually retests the distribution area, which I've got highlighted, and immediately reverses. So this is a very strong sign for this stock. Clearly, there's a lot of demand from institutions, and any sort of pullbacks like that or any sort of consolidations, I'm going to be looking to trade. DRO, Drone Shield, still holding this one at the moment. Very nice tradable base that was formed here as well. Now it's heading up almost to, I don't think it's all-time highs. Let me have a look. No, it's still got a fair bit to go. I actually remember this when this IPO'd in 2016. I actually pretty much just started working in financial markets at that point, and I remember people talking about it. Hadn't really seen many drones before, but I guess now it kind of is a big deal. And it's performing very well in terms of on the price chart as well. If I have a look at the financials, again, what's that per quarter? What, 211% increase the past 2 quarters, and doing quite well on an annual basis as well. I don't think it's profitable. No, it's not, but it's getting close. We're going from negative 5.3 million to just under $1 million. So clearly doing well. Things are turning around, and again, if it breaks out of this IPO base, which I mentioned before, it's off to the races. So still holding, and we'll be looking to continue to accumulate on any sort of pullbacks or consolidations. LYL, so another engineering and construction stock. Don't know much about the company. Financials doing very well. And look at this. This is pretty much perfect when it comes to tradable. So you got that consolidation. You got that very tight, nice pivot point, and then it breaks out on decent volumes. So these are ones that I typically like to trade. And all these areas here. So again, you've got clearly a clear level of support, and you're seeing these shakeouts all around demand areas all the time. All the people that are getting long around here are getting shaken out over and over and over again, and then they're all going to rush to get back in when it starts to break out, especially when it starts to head to all-time highs, which it is at the moment. Have a look at the financials. Doing very well. Growing its revenue. That's exactly what I want to see. So watching on the watch list going forward. GTK, so again, don't know much about the company, but look at this, formed many tradable bases, 1, 2, and forming another one now. So I'm going to be watching this, any sort of tight pivot point and breakout, I'm going to be looking to do. So may even look for some sort of a demand zone around here. Clearly something going on around these levels here, so may look to get involved on this one as well. VYS formed a very tradable base here as well, in an uptrend, company's doing well, look at the financials here. Growing its revenue, what I like to see, heading to the upside, not at all-time highs, as I guess it's one of those stocks that's being battered down, but is starting to come back. What I'm going to be watching for is any sort of consolidation similar to this, and I'm probably going to be looking to trade that one as well. Boss Energy, now, I don't think the company has any revenue, but in terms of uranium stocks, I mean, I do like the sector, do hold some stocks as well, but this one is clearly leading when it comes to uranium stocks. It's doing the best. And look at its performance as well. Look at this tradable base, formed a nice pivot point and broken out of that. So I'm going to continue to watch this one. Any sort of bases, similar to, I guess, this one down here as well. You've got here, managed to break out of that level as well. So I'm going to be watching this one going forward. That's Boss Energy. NXL, Nuix, 2 tradable bases here, trading at 52 weeks higher now. The company's been growing its revenues. Again, I'm going to be watching this one for any sort of consolidations, one to add to my watch list. AMD, this one, I remember in the bull market that we saw in 2020 and 2021, I think I had, nearly 10 trades on this one company alone. Usually forms a very nice tradable base, which it has done recently as well, and it's trading at pretty much 52-week highs now. So granted, this bull market continues to go, I'm going to continue to look to trade this stock, and this is typically what I like to look for. Any sort of pivot points, particularly around its moving averages, usually does pretty well in my experience. PDD, so this is on the NASDAQ, forming a tradable base. Only even managed to pull back to its 21-day moving average after a gap out on solid earnings. And when we look at those earnings as well, it's doing well. So look at it annually, it's growing consistently, and I'm pretty sure it's profitable as well. So look at that, 4.6 billion in net income. Now, I'm sure there's probably a few things that went on to get it that I'm not aware of, but that's for further investigation. So far, it's forming a very nice tradable basis. The volume profile is good. I'm going to be watching this. Any sort of breakouts, I'm going to be looking to trade this one. PSHG, I have no idea what this company does, and it's got a market cap of $27 million, so I tend to stay away from these things, but look at this stage 1 base. It has been growing its revenue as well. If it is able to break out of this and continue to head higher, it might be something I do. Probably my position size are probably going to be a bit too big for this, considering its market size, but I do just like to throw ideas out there. AGE, Alligator Energy, another uranium stock forming a tradable base here. Again, these companies don't have any revenues, so I tend to stay away from these ones. However, I do like the uranium sector, so I probably would look to trade this one, at least me personally, around if it manages to form a pretty good tight pivot base, which it looks like it may do. So I'll give you kind of an example of that. If it's managed to go up and then form that tight pivot and then break out from there. So that's typically what I look to do, but we'll see. And then I got EPY, Early Pay, listed on the ASX. Look, I kind of have a bad taste left in my mouth from all these buy now, pay later stocks. I was one of those people that did very well on Afterpay. Having said that, all of the ones that followed, like the OpenPay and NextPay, all these other shit ones, got stuck trading some of those, which I wasn't too happy about. So, but it is forming a nice stage 1 base that I may look to trade if it manages to break out of this on decent earnings and to continue to head upwards as well. Let me have a look at its revenue. Not too bad, but not great either. I mean, yeah, look at that. It's not really doing particularly well as a company. So, not a huge fan of this, but I will be watching it regardless. That's all I wanted to touch on so far. So again, this is going to be the first episode on this. If there's any stocks you want me to cover, by all means reach out. I'm going to be doing a lot of videos, particularly on financial markets and trading. So look out for those. I plan on doing this on a weekly basis. Thanks for your time. Really appreciate it. Take care.